Now we have case scenario number 12, which is on partnership firm, section 40 clause B, calculation of remuneration and interest allowable as a deduction to the firm. ABC and Company is a partnership firm engaged in the business of sale of footwear. The partnership firm consists of three partners, A, B and C. A and B are working partners, underline this. That means C is a sleeping partner, non-working partner, non-active partner, or a dormant partner. The firm is liable for tax audit. Please underline this, liable for tax audit under section 44AB of the Act. It has a book profit of 11,50,000. Now book profit is relevant for the purpose of section 40 clause B, and book profit amount is directly given to us. Good. So we will not be required to find out book profit. Otherwise we would have had to start with the net profit as per P&L account. Then we would have had to make some adjustment. We would have had to add back the remuneration to partners. We would have had to add back interest to partners. We would have had to make plus minus income tax adjustments, and then depreciation, etc. But straight away the last figure, book profit, is directly given to us, which is a good sign. Following payments were made to the partners as authorized by the partnership deed. Now we know pretty well that as per section 40 clause B, least of the three is allowed: amount actually paid, which is given down the line, or amount authorized by partnership deed, or amount calculated as per 40 clause B. So amount authorized by partnership deed and amount paid is exactly the same. It is given. Even if they would not have given this line to us, we would have had to make this assumption. You know pretty well. Number one, remuneration to A and B, 32,000. These two are working partners. 32,000 per month to each partner into 2 is equal to 64,000 per month. 64,000 is per month. Be careful, this figure is given per month basis. Now here institute may try to play a game. Some figures will be given on a monthly basis and some figures will be for the whole year. Remuneration to partner C, who is a sleeping partner, is 10,000 per month. Interest on capital at the rate of 9.5% to A and B, 18,500 per annum. Now this figure is per annum to each partner. 18,500 per annum to each partner. 18,500 into 2 will be 37,000 to two of them combined together. This is the remuneration to working partners. Sorry, interest to working partner. However, as far as interest calculation is concerned, it doesn't matter whether it is paid to a working partner or non-working. Working, non-working makes difference only for remuneration, not for interest. As far as interest is concerned, even if paid to non-working partner C at the rate of 17% is absolutely fine. 10,540 per annum. Interest is given on an annual basis and remuneration is given for monthly basis. The following brought forward losses of past years: AY 2021, 21, 22, 22, 23. We know pretty well business loss can be carried forward for 8 years. That means current year AY 23, 24 will be the third year for this loss, second year for this loss, and first year for this particular loss. 22, 23 assessment year will be 0 year. 21, 22 itself will be 0 year. 23, 24 will be third year, second year, first year. Any which ways, if you don't understand this, is absolutely fine. Business loss and unabsorbed depreciation. Unabsorbed depreciation can be carried forward for an unlimited period of time. We know pretty well. Therefore, we don't need to compute whether 8 years have lapsed or not. And long-term capital loss. Long-term capital loss can be carried forward for a period of 8 years. However, just for the sake of your knowledge, this is a final CA level point, but institute has applied this point here also. By default, business loss includes unabsorbed depreciation also. Business loss, when we talk about business loss, let's say 26,000. So 26,000 includes 17,600. So pure business loss will be 26,000 minus 17,600. I mean to say 26,000 includes 17,600. 78,000 includes 29,860. So when you are making computation, you don't have to subtract unabsorbed depreciation separately. The total loss, total business loss including unabsorbed depreciation will be 26 plus 78 plus 105,670, which is brought forward to the current year. Long-term capital loss will be taken into account separately. However, if they ask us to compute only business income, then we will not set off long-term capital loss. We will set off long-term capital loss only if they ask us to find out total income. Then only we will compute this, we will subtract this, otherwise we will be ignoring long-term capital loss depending upon what is asked to us. Question is over. Based on the facts of the case scenario given above, choose the most appropriate answer to the following questions. Number 1, 12.1. What amount of interest is allowable as a deduction in the hands of the firm while computing PGBP income? Interest. So as far as interest is concerned, we don't distinguish between working and non-working partner. If you can see here, interest on capital 19.5% to A and B, 18,500 per annum. Actual amount is 37,000 because it is 18,500 to each partner. And interest on capital to partner C is at the rate of 17%, 10,540. So let's calculate for A and B first. So allowable amount will be 37,000 is at the rate of 19.5%. And this is authorized by partnership deed. So actually paid is 37,000, authorized by deed is also 37,000. What will ultimately be allowed will be 12%. So what we will do is that for partner A and B, we'll compute here only. For A and B, 37,000 is actually paid, which is at the rate of 19.5%. So how much will be at the rate of 12%? This is what will be allowable. 37,000 divided by 19.5 multiplied by 12. 22,769.23, that means 22,769. 22,769 will be allowable. And as far as partner C is concerned, how much is paid to him? Partner C at the rate of 17%, 10,540. 10,540 is at the rate of 17%. Then how much will be at the rate of 12%? It's 17%, right? 17. How much will be at the rate of 12%? We'll have to calculate this out. 10,540 divided by 17 into 12. 7440. 7440. The total allowable to both the partners combined together is 7440 plus 22,769 is equal to 30,209. 30,209. Let's check what's institute's answer. 30,000. They have rounded it off to 30,210. D is the answer. However, they should not have done this, but it's okay. Let's check institute's answer. Institute's answer is also D. For 12.1, 30,210. Now 12.2. 12.2, what amount of remuneration not allowable as a deduction? Not allowable as a deduction. Understand very carefully. For interest in 12.1, they said how much is allowable, and for remuneration they are saying how much is not allowable as a deduction. It's a negative question or a reverse question. So we'll have to apply section 40 clause B. As per 40 clause B, you know pretty well. They have already given us book profit directly. Book profit is given to us here 11,50,000. Now remuneration actually paid to the partner is 32,000 per month to A and B working partner into 264,000, and remuneration paid to partner C is 10,000 per month, that is 1,20,000 for the whole year. This 1,20,000 will definitely be disallowed. If the question says how much will be not allowed, so 1,20,000 will certainly be disallowed, and out of whatever is paid to working partner A and B, 64,000 per month into 12 months, we'll have to find out how much will be disallowed. So 12.2, book profit is already given to us 11,50,000, and remuneration allowable. Book profit means this is already computed. That means actual remuneration paid to all the three partners must have already been added back, and then interest must have been subtracted, and that is how we got 11,50,000 readily given. As per section 40 clause B, we know pretty well first 3 lakh rupees of book profit, 90%, that is 2,70,000 is allowable, and on balance book profit of 8,50,000, 60%, 6 8s are 48, 4,80,000 and 30, 5,10,000. Total as per 40 clause B will be 7,80,000. 7,80,000 is allowable, but this is allowable to working partners. How much is actually paid to working partners? Only A and B are working. 64,000 per month, that is 32,000 to each partner per month into 12 months. 7,68,000 is the total amount paid. Let's calculate it out. 64,000 per month into 12 months, 7,68,000. Whatever is paid to non-working partner C, that has already been ignored. So out of these two, whichever is lower. So answer allowed as per 40 clause B will be 7,68,000. Whatever is actually paid. So how much will be disallowed? Amount disallowed, which is asked to us in the question, will be nothing in case of partner A and B, because whatever is paid to them is fully allowed. It is lower than 7,80,000. But as far as whatever is paid to non-working partner C, 10,000 per month into 12 months is equal to 1,20,000 will be disallowed. The total disallowed amount will be nil plus 1,20,000, 1,20,000. Let's check what's institute's answer. Our answer is 1,20,000. 1,20,000 is the first option only. Let's check what's institute's answer. Our answer was A. Institute's answer is also A, 1,20,000. 12.3. What is the due date of filing return of income for Mr. A and Mr. C? Mr. C is a non-working partner. Mr. A is a working partner. They have not asked about B for the AY 23-24. Due date for filing IT return. Due date would be, if you recollect, it is given at the beginning that firm is liable for audit. Here it is given, firm is liable for tax audit under section 44AB. Since the firm is liable for tax audit, the due date for partnership firm will be 31st October, and therefore the due date for all the 3 partners will also be 31st October only. Correct answer is 31st, sorry, this is not the correct answer. C is the correct answer, 31st October 23 for both A and C. Our answer is C. They are saying D is 31st October for C and 31st July for A. Wrong answer. 31st July for C, 31st October for A. Wrong answer. 31st July for both of them and 30th September for A. Sorry, this is also wrong. Correct answer is C, 31st October for both of them. Let's check what's institute's answer. Our answer is C. Institute's answer is also C, 31st October for both of them. Now 12.4, last question. What would be the income under the head PGBP in the hands of ABC and company? Now I told you very clearly that long-term capital loss which is brought forward will be taken into account only if they ask you to compute GTI or NTI. Here they are not asking us to compute GTI, NTI. Total income is not asked. They are asking how much will be income under the head PGBP. That means we will be ignoring that loss under the head capital gain. Long-term capital loss will have to be ignored, and unabsorbed depreciation will be deemed to be part of business loss. So unabsorbed depreciation will not be subtracted separately. From whatever income that will compute, we will subtract only losses. We will take the total. Now we have already computed that 7,68,000 of remuneration will be allowable under section 40 clause B. Now 12.4, book profit given is 11,50,000. Remuneration as per 40 clause B, which we just calculated out, allowable is 7,68,000. There are no other income tax adjustment. Balance would be 768 minus 11,50,000, 3,82,000. No need to take 3,82,000 total, but I am taking it. It is not required. And then brought forward losses. Now book profit is after subtracting interest. Understand, interest allowable to partners must have already been subtracted. That is how we got book profit 11,50,000. So institute has readily given us 11,50,000. From 11,50,000 we have to subtract only remuneration. We don't have to subtract interest amount. Brought forward losses, which includes unabsorbed depreciation, is how much? 26,000 plus 78,000 plus 105, 670. Let's take the total. 26,000 plus 78,000 plus 105, 670. Total losses are 209,670. 209,670 we will be subtracting. How much will be the balance? 209,670 minus 382,000, 172,330. 172,330 will be the PGBP income. Let's check whether this is one of the options or not. 172,330. B is the right answer according to us. Let's check what's institute's answer. Institute's answer is also B, 172,330. With that, this case scenario comes to an end. See you in the next video with case scenario number 13.